All right, folks, welcome to episode 2 of CRT Secrets. Now, the series is going to be at least one episode per month till the end of 2025. Because for the year 2026, starting from October, you'll be able to get your hands on my book. Right, so stay tuned for that. But anyway, let's get into episode 2, which discusses one of my favorite, most underrated, most overlooked, most undervalued model. And those are usually the best ones, right? Because what most people are looking at is usually what you want to steer clear from, right? Because those are the models that usually the market makers, because it is real. It is a fact that the market makers are active and they are amongst us, right? They are on social media. They watch traders. They watch what traders trade. They watch the models that are made to be common, and they print those models and they fade those models, right? Which is one of the reasons the fake market structure shift, FMSS, exists, right? Which is another model for another topic. Anyway, we're going to focus on the kiss of death turtle soup, which is one of the most important and honestly one of my favorite fastest models in trading. Right, it ranks quite high in the system. Let's remove that. Casual 300 pip live call. There you go. Now, as usual, we're going to zoom in on a certain candle, right? Because after all, we are candle traders. We are not zone traders. We trade candles, right? So pick one specific candle. And the astute pupil is thinking, which candle traders are we? We're mostly weekly and daily candle traders, right? So we zoom in on this one specific candle, right? And this is a trade you saw me call live and trade, right? So this is not some hindsight garbage, as you see so often with the so-called mentors on social media, most of which, in my opinion, should not be mentoring anyone about anything, right? But that's the world. CRT, so candle 1, candle 2, candle 3. Accumulation, manipulation, distribution. We're going to take the range of candle number 1, and then they're going to turtle soup that range and then attack the low of that range, right? So CRT, in a sense, is simply a proliferation. It's a more precise way to look at ranges, right? It's all in the ranges. Ranges are the key to the charts, right? So a kiss of death turtle soup basically is, and before going further, we're going to analyze and see that we're going to go and take, basically the price is going to go and attack this side of the candle and target this side of the candle. It's not because it's a candle. It's not a pattern, because I've seen and noticed a lot of pattern traders on social media who try CRT, try turtle soup. They fail once or twice and they go and blame the system, right? Which is wrong. It's always your fault. It's always, I repeat, it's always your fault. Learn to blame yourself and learn the art of blaming yourself if you want to truly see progress. Right? Because me, I'm good. The system works for me personally with a 90% accuracy rate. If you don't have the same thing, then remember that the journey of learning knowledge, right, and acquiring knowledge is a lifelong journey. So you're not going to learn it in 5 minutes and apply it for the rest of your life, right? That's not true. Anyway, candle 1, right? So they pause price in this range high, range low, and you got the daily CRT. Let's go and look at it on the 1 hour, right? Monthly, daily, weekly 4 hour, and daily 1 hour. You can't play around with that a bit, but that's the golden rule. Now, the kiss of death turtle soup is basically the final turtle soup before the target is hit, right? And I touched on it briefly in the previous lecture of tape reading. All right, but let's go a little bit more in depth. Now, here we have the CRT high, right? Range high, minus turtle soup. And then we have the CRT low, which is going to be our target. All right, target 2, and the 50% is target 1. All right, we got target 1. And then the final turtle soup before the target is hit is the kiss of death turtle soup. Usually a very fast, vicious move into the target. And what's more important is the logic behind the kiss of death turtle soup. Right? That is more valuable than the pattern itself. Now the logic is they've created these two liquidity pools, points, buy side and sell side liquidity, right? And what they're going to do is they're going to push price. And when I say they, for the sake of this lecture, the market makers, right? They are going to push price above the previously engineered liquidity pool, right? They push price above, and then they will viciously, what this does up here is the following. It's going to stop out previous shorts. It's going to entice more longs, right? So we have breakout traders, which form quite a large volume of traders in the market.
Únete al lanzamiento virtual de Mastercamp 2026 en acción. Descubre cómo conseguir.
Breakout traders are looking for this exact thing to go long, and they expect price to go higher, right? But that's not the case ever. Well, not ever, because never say never, because we do have true versus false breakouts, right? True breakout over here versus false breakout over here, all right? False breakout, turtle soup, and a true break of the low. Same here, right? That goes into market profiling, which is not a topic for now. But the point is, they have now gathered all the liquidity they need for the move. And remember, before any large price move, note this down, before any large price move, there is a turtle soup. Right? It's kind of like think of it like as the fuel of the price, right? Price is a car, and turtle soup is the gas you put in, or the petrol for the Europeans, right? The turtle soup is the fuel, the gas that allows price to move, which is why usually if you don't see a turtle soup, you'll see a lot of chopping around, right? They chop around, they wait, they then fill up the motor with gas, turtle soup, and then they dump, all right? So we have, they upset all the previous sellers and they entice new participants, buyers. Excuse me. And then they break lower, right? 50%, usually bounce at 50%. And then what happens is, at this point in time, retail traders dump money. They are unsure of what price is doing next, right? Why? Because they are uninformed, right? And this could apply to you, which is fine. But the point is, uninformed money is the liquidity that fuels the kiss of death turtle soup, especially, right? Because at this point, if you are uncertain, right, like market, at this point right here, if you are uncertain of where price is going, or here, right, or an ICT FVG buyer over here, right, which has turned out to be quite a lot. Because back in the day, back in 2016, 17, ICT was it was obsolete. He wasn't very well known, right? Which is why the concepts, it's weird to say, but they worked better back then. Right? But now that he's gone mainstream, you can notice more and more that the market makers are using that to their advantage, which is why every PDRA has now given birth to a fake PDRA. All right, so this would be a fake FVG. All right, so we have uninformed money right here, dumb money, retail traders, the average Twitter mentors. They are uncertain over here of where price will go next. They can't determine with a degree of certainty where price might go. And then when they see price pumping up higher over here, and remember, this one specific candle was at one point a massive bulging up close candle, right? Which also suckers in a lot of people, right? And that is the advantage. The bravery of selling against this rally is something only experience can teach you. I can teach you, I can tell you that it's going to happen. I can warn you to look out for it, for example. Right? I can indicate to you the ways to avoid being suckered by it. However, what I can't do is you taking this information from me in this episode and going and applying it in your chart. That's something you have to do, not me. Right? And same goes for getting comfortable buying in massive up-close candles, or, selling. Getting comfortable selling in up-close candles. Over here, look at this massive up-close candle, which usually scares away the beginner trader, right? But you have to train yourself. You have to train yourself to get comfortable to sell the big bullish candles, and you have to get comfortable buying the big bearish dumps, right? Within rules, of course. Right, so they push price up, turtle soup, they dump down 50%, little bounce, and then they push price up, suckering in all of the uninformed money, and then eventually dumping down into the previous CRT low, right? Now, knowing CRT, and I don't care if you're an old student, a new student, a hater, a fan, whatever, knowing that CRT exists is an advantage by itself, right? So you simply knowing that there is a pending CRT here is reason enough, and it might save you some money, right? Or make you some money if you sell up here or not buy up there, right? Why? Because you have at the back of your mind a CRT down there pending, right? And this is an exercise for the haters and the skeptics, which is fine, right? I understand that once you blow up the way I have, then you then that comes with fame, comes with skeptics and critics and haters, right? And for those people, I recommend you to fade CRT, right? So for example, see this CRT forming, and then try and fade it and see what happens, right? Following the rules I give, of course. That's a good way to also for the non-haters. That's a good way to test a strategy, right? Is don't try and look at where it worked. Try and look at where it didn't work in real time, right? And usually, if you follow the rules, then quite fast you'll realize why I've put the $1 million bounty on someone forming a better system, because a better system does not exist and will never exist, ever, ever. And I say that with utmost confidence.
Es posiblemente una de las decisiones más importantes para tu negocio. Tu decisión clave es...
And bounty stands, right? Here's another re-announcement of the bounty, If anyone can find and present to me a system more accurate than CRT and turtle soup, my system, then I will personally wire them $1 million to their bank or cash or crypto or whatever. Right? It's not going to happen. So we have turtle soup, kiss of death turtle soup right there. And we pair that because, remember, in a trade, we want to look for as many confluences as possible. Right? So when you have an FVG above an old high or an FVG below an old low, then usually that's a good confluence for a buy or a sell. In this case, we have an FVG, a bearish FVG, a bearish gap above an old high. Then usually that's a good candidate for a sell. In this case, a kiss of death turtle soup. Right? Now, the entry model, of course, for the astute people is going to be, what's it going to be? You're going to find a model number 1 on the lower time frame. And as always, as you see, the last thing I talk about is the entry model. There you go. Risk up here, reward down there with confidence. And of course, as usual, they leave you some equal lows as bait for the double bottom traders. And down they go. Right? And down they go. And that is an example of a bearish kiss of death turtle soup. Right? And usually it's going to happen, it could happen, and it usually happens, and I like to happen in the lower 25% of the range. But it could happen as an OTE. Right? In this case, you got there, breaks down, and then OTE, and then down it goes. Right? Right, now my entry was up here in this turtle soup. I will leave that for you to dissect, and I will leave for you to, as homework, until next time, to go and reverse engineer and backtest and dissect a bullish kiss of death turtle soup. Ideally, I will say live, like forecast live, a bullish kiss of death turtle soup. If you can't, if you haven't reached that stage yet, then simply backtest it, right? Because history is a gold mine, and it does repeat itself. Right? My entry was up there, as you saw, and up there. But that's me. Right? I have access to the system itself. And not to overwhelm you all with information, but a simple kiss of death turtle soup. In summary, right? To recap, CRT high, CRT low, turtle soup, kiss of death turtle soup, and dump. Right? Alright, so it's two-dimension. We look at trading at the candles during analysis at 2 dimensions. From the higher time frame, the higher time frame candle shape versus the lower time frame candle slop, and whatever happens over there. Right? And that marks the end of this video, episode 2. I hope you all found that insightful. I wish you all good luck, good trading, and see you in the next one.